Hey, it's Anthony Tucker with Land Title. We came to bring your lender update for the month. Let's dive right into data from July.
All right, so what we're looking at here is, first thing off the top is we're looking at this graph. We see this nice big high green line with this big high level of active inventory, but it decreased, which is a little odd because we didn't have a ton of under contracts. So what's happening, Anthony?
so what we've really experienced way earlier than usual is people are frustrated on the market and they're expiring listings. So is this good? Is this bad? I don't really know. It's a symptom of high inventory environment with very stable, lower amount of buyers. The interesting part is, though, if you look at July, right, you can see we had 14% more under contracts across the market, but average sales price is dipping. And from all of our perspectives, I think it's probably safe to say it's going to be easier to get buyers under contract. This may not be great for sellers in the short term, but it definitely will help fuel the real estate market going forward. So what I would say is this is a good time to reach out to those buyers, get people active. Going into a fall market with maybe a little bit less inventory than we have now isn't so bad, right? We have plenty of inventory.
And you can just visually see it on the graph, right? Look at where the green line is, even after the small dip from July to August, June to July, you can just see that small dip. And then once again, as we're looking across all of our submarkets in the county, really nice to notice where are we seeing the decreases in inventory the most, what's staying relatively flat. Erie's still relatively flat. They're still at 239, 240 available and detached. Then when we look at Boulder, Lafayette, Louisville, we saw some pretty good decreases in the amount of active inventory and detached single-family houses, whereas we saw a slight increase in Longmont, right? Price point, different, little bit different market or sub-market than, especially Boulder and Longmont, let alone Superior. So it's kind of interesting to see what's going on in the supply, but overall we saw a slight decrease month over month from June into July.
Right. And it is seasonally abnormal, right? Mm-hmm. Usually we don't feel this till late August into September. Now, if we take that on the attached side, it's also important to remember the attached market is in a very different place than it's been. We're feeling some of the same thing, right? Now, last year, July was the peak of inventory, but this year it seems to be June was the peak. These are frustrated sellers, right? Prices are falling. We have a lot of compression in the marketplace. It's a tough one, but is it a really good time for buyers to take action in this market? Absolutely. I mean, if you can get something under contract, chances are you could probably go get a deal right now.
Yep.
So I think that's important.
And that's where you can really keep pushing that narrative as the lender of, hey, this is what I'm seeing out there. There's some great transactions, right? Think about the credit you're seeing on transactions. But let's jump over to our month supply of inventory, right? This is that relationship between if nothing else hit the market with the current level of demand, how long would the inventory last? And you can see we're hitting right at that 4.5 months right now. Pretty similar to last month, but we had some slight decreases in other areas in the county. So the submarkets are really telling a different story than the whole county. And that's because there's quite a bit of different product across the county.
Right. If you're talking about higher price points, you're talking about Niwot and Boulder. Really, we're pushing 6 months of inventory there. It's a lot of inventory, and you're feeling that in the price compression. But there are a lot of places out in the county. Most of the L towns, Lafayette, Erie, Longmont, those places were at 3.5 months of inventory. It still doesn't feel terrible as a seller, but your buyers have a lot to choose from. But they can go out there, they can be active, they might even be able to find a decent deal.
Yep. But just remember, also, just stay on that real quick for a second. Think about how high that is, right? We're talking 3.5 is on the low point. Lafayette at 3.3, which, if we remember back to 21, 22, they're hitting half a month of inventory. And that was just because of how long it took.
Very different time.
But this is just showing how fast it's changed. And so just keep that in mind. We were hitting 0.5 when we were back in 21, 22. Now we're at 3, right? So just keep that in mind as this, but you can share these numbers with your clients of saying, this is why it feels different, is because it is different, and these numbers back it up.
Yeah. So days in MLS, this is another thing, right? Obviously, month supply of inventory is going to raise. You got a lot more inventory to look at. Buyers have more to choose from. It's going to take longer to sell. Well, that's fine. 50 days on average across the county, but it is very different area to area. Louisville actually had more days in MLS, it had more month supply of inventory, but the days in MLS are actually shorter, 38 days. And Niwot, 6 months of inventory, 17 days. What this is telling us is it tells us a lot of things about the quality of sales and the realism in price, right? If sellers are realistic on price, your buyers might actually have to get out there and act quick. If it's really tip-top condition and that's what they want, they need to be active. They need to get out and look and find the good stuff fast.
So,
and it's happening across the county.
Yep. And so that's where, hey, the nice high quality product that is priced well and shows well, that is, you're not going to get 3 tours over 3 weeks, right? You need to make a decision a little bit quicker. I recently was talking with an agent on the listing side, and they said exactly that. We got one really low ball offer, called the other 5 people who had done a showing, got 3 more offers because they're all just sitting on their hands.
Unbelievable.
So right now, that's just really showing people are sitting on their hands to help motivate your buyers out there to get things moving. Okay. You want to touch base on this?
Yeah, I'll talk about detached. You talk about attached.
Oh, lucky. Thank you.
I know.
Giving me all the positive ones.
Okay, so here's the thing. When we look at total solds and we look at where it's taking place, it tells a lot about the market. Above 2.5 million this year, we've seen a lot more sales, right? We have 200 units of inventory on the market, but we had 10 sales last month. And 10 sales, even though we're kind of in that same vein where it doesn't feel like a lot out of 200, it really truly is a big increase in luxury behavior in Boulder County. Now, when we talk about the $1.5 to $2.5 million market, that's where you're really feeling that like interest rates are high. I don't want to take out $1 million loan because I don't like the payment on it, right? So the jumbo product, that's where we're seeing a lot of that constriction in the marketplace. And that's why you're seeing 6 months of inventory in Boulder. Anything below that, back to like that average and median sales price across the county, you're seeing a little bit of an uptick in buyer activity, right? They're getting more used to these higher interest rates. A little bit of a dip lately hasn't hurt, right? So 3, 4, 5% increase in some of these shouldn't really be surprising, but it just kind of telling that story of really what buyers are doing out there, right? Yep. Attached, very different story.
Oh, completely different story. So what we're looking at here, first off, is we can see we have decent amount of luxury supply in attached, 2.5 million, 2 million, or even 1.5 million in attached is
even $1 million and up, right?
Yeah. So we have a lot of there. We don't have a lot of solds. And so this is what's really been, a drag on the attached market and our average sales price as well, is right. Those average sales prices really love it when 1 or 2 of those, 2 million, 1.5 million attached brand new lock and leaves get sold. Those aren't moving right now. And that is really dragging the upper end of the attached market down. And we're going to really start seeing some, maybe a little bit more competitiveness on the listing side to really bring these products out and really get them sold because the buyers are just not coming in. Now we are entering into CU football season. So just remember to keep your auto flow up because surprisingly, we actually normally see a little bit of an uptick in our attached market, our luxury attached market during the football season because it's a great way to come have a lock and leave and party with your friends for the Buffs games. But when we're looking at these numbers, it's really across the board that we're seeing a decrease in sales month over month. Now, as we get lower in the price points, year over year, but when we get really into the lower price points under that 600,000, which is for the majority of the county, that's our existing, townhouse, older, smaller townhouse or newer mid-sized condo, that's doing okay. But over year over year, it's just down quite a bit, and it's not getting any better right now. And this is the hard part: is we're still seeing increases in supply, not on every price band, but in a lot of our price bands, we're still seeing increase in more product coming to market, even though the existing product isn't moving. So it's a really tough market for the attached.
Yeah. Okay. When you look at it from month supply of inventory and days on market, this is a good way to explain to your buyers. Okay, what's it going to feel like in your price range, right? Under $1 million. 3.5 months of inventory. It's still fairly balanced market out there between buyers and sellers, so they don't have to take your offer, but it's taking longer to sell their home, so they might be motivated. You get into luxury stuff, the good stuff is selling, the rest is sitting. If you talk about attached, it's just a different situation where you've got that bar really moved up to where it's like 4 to 6 months of inventory on average. It's taking a lot longer to sell. People that are super aggressive on pricing are going under contract fairly fast, but it's still taking over a month.
And there's a lot more concessions in there. There's a lot more giveaways. It's a lot tougher in that.
Yeah, we are seeing about 60% concessions or even a little bit more than that across Colorado under $1 million. So, and like in the neighborhoods of almost $10,000. Tucker, talk about average sales.
Yeah, so our average sold price in detached, right? This has actually been doing pretty well. We're going to continue to see this doing well, especially because we just had all these nice luxury sales.
I love that you call this doing pretty well because these numbers do not look great.
No, they're not doing well, but comparatively to previous month, we had a nice increase in our sold price month over month. And the reason why is because, hey, we had a lot more luxury sell. So that's why our month over month moved up. Now, when we look at our year over year, that's not as positive compared to last year.
So minus 7% is pretty daunting.
That's not good. But I really want to kind of dive a little bit further and look into the submarkets, right? Down in this lower part, we can really look into that month over month, year over year change. The higher priced areas have had more of a drop, right? Look at Niwot at 27, Boulder at 8. Now, Longmont,
27%. Take it with a grain of salt, right? Niwot's a very small marketplace.
Yes, so there's
a couple
probably
of $4 million homes sell 1 month, a couple of $500,000 homes sell 1 month. That's a big shift.
Yeah.
But
then we look at Longmont and Lafayette, and they've had a really large decrease in their average sold price year over year. Now, when I want to look at that is, let's see if is this consistent, or is this just a weird month and weird month for the data. So let's look over that far right column, that TTM percent change. Yes, they are down, but they're only down slightly. That's 0.4, 1%. So that means over the last 2 years, the average has been slightly decreasing, but it's not a drastic, the world's falling. So be careful with sharing this slide, because if you see that and you go, oh, Lafayette, 17% less on average.
Ooh, that sucks, right?
Good luck writing those contracts and getting those accepted.
Totally.
So, it's all with a grain of salt in the detached.
Yeah, the TTM percentage change really tells a good story for the county, right? Boulder County, very stable. I think that's the message you need to take to your clients. When you talk about the attached market, this is where we're talking about some of those hurdles, right? You're seeing it even worse in the Denver metro area. They've been really declining in price for basically the last 3 years.
Mm-hmm.
Boulder is more resilient, right? It is very clear in the data that over the last 12 months, Boulder County is only down 1%. I would argue that most of the condos that are selling, we're probably feeling about a 10% drop, right? The townhouses that are newer and nicer, they probably feel more like the detached single family home median. And the luxury stuff is doing what luxury does. It depends on where it's located. It depends on a lot of things. Some selling, some isn't. But we're definitely feeling price compression at the higher end as well. So hopefully that's helpful. You can see by submarket here, City of Boulder, I think, is really misrepresented with the TTM percentage change number. We've seen so many more luxury sales taking place that it's not telling a story about what's happening at the median. And the median feels like the average across the county. Yeah. And so I think that's tough. Tucker, what about the total sales for the year?
2 things on the total sales for the year. One, we are up. So as much as everyone thinks this is the worst year that we've ever had and this is the world falling, we're actually doing better than last year in the number of sales. We're just feeling that because of how tough it is on the listing side with those listing agents. Yeah, and we're all working extra hard for it, as I'm sure you all are. And this is where we're actually doing better in the number of units sold, right? So that's a really good sign. But let's go ahead and take a little bit of a look into August and September and throughout the rest of the year. Remember last year we had that awesome rate drop around September. Hopefully we'll get something similar this year.
Yeah, really a little bit more October sales, right?
A little bit more uncertainty. So don't expect to see these October, November, and December sales numbers unless we get some really nice rate relief and some good positive media, because that's what's going to help drive it. So right now, with where we are in August and September, expect our those red lines to start filling in kind of at a downward trend all the way down to December, and then it'll pick up again next January.
Here's the thing, though. The MBA and Fannie Mae, Freddie Mac are all putting projections out that rates will be lower by the end of the year, right? Everybody's talking about rate cuts in September. We could easily be in the same environment we were in last year, even if it's for a short period of time, and it would boost buyer behavior. So don't just panic and think the end of the year is going to suck. I really do think there's a good chance that we will see a very similar year to last year. Rates have been stable and a little lower, and it really is creating a little bit more of that buyer activity, as you guys know that, right? But I want to point out, obviously we can't rely on it, but also things are kind of headed that direction. So there's a little bit of light at the end of the tunnel, but it's not like we're going to have a bonfire of buyers anytime soon, right? So
we all watch the same stuff. You guys are brokers. We watch it with you guys.
Yeah.
We're all in the same boat. We've all been praying for lower rates. I just no longer am going on a limb and even giving predictions. I'm just going, let's just see what happens. Because
it's true.
Keep your auto flow going and we'll see what happens.
Okay, sold to list price. This is the last slide we've got to talk about, but I think there's one really important takeaway. Your buyers can get a better deal than they could at this time last year. If you look across the whole market, it's about 1% less when they go out and actively negotiate. So the message is, don't be afraid to write offers, right? So as a lender, you can go out and say, look, agents, get those buyers. If they want to be aggressive, great. Let's just write some offers and see, right? And I think that's really where this is. Now, this doesn't take into account price drops or concessions. So those longer time on the market, there's more opportunity there for that, obviously. But 97.5% list of sale price doesn't quite tell the story we've been experiencing. So it's really the change in that number.
Yeah. This is the change and the number of concessions.
Well, and 63% or 62% concessions like we've experienced is so much higher than it was a year ago.
Oh, yeah.
So buyers are controlling it.
And remember, coach your agents of how much concession they can get based on the purchase price.
Totally.
Because we've been running into getting very creative in escrow of, okay, we have an extra $10,000.
Yeah, what do we do with this?
Do we just pay HOA dues for the next 20 years, or what do we, how do we handle this?
20 years, not in Boulder.
No.
More like the next year.
Yeah. Well, then attach you. But so just remind your folks of, when it comes to the financials, really good value add of, hey, these people are approved for X, Y, and Z. Just remember, the max concession they can get is this, because that is something that's coming up a lot, and it's a great way for you to reach out to your real estate partners.
Thanks for joining us today.
Thanks,
Obviously,
everybody.
Reach out to us if you need any other information or data. We're always happy to help.
Take care, everybody.